insurance could very well be, I don't know, 30-40% of the value of the car business, frankly.
I finally figured out how Tesla will scale its insurance product to around 1/3 of its entire automotive business.
Hey, this is Warren Redlick. I'm going to disagree with two of my favorite people. Elon Musk and Stephen Mark Ryan of Solving the Money Problem both think Tesla will make huge amounts of money off car insurance, and I think they're wrong. I'm going to tell you why. Are you ready? Let's go. Before we get into it, I'd like to thank Bradford Ferguson of Halter Ferguson Financial and all my Patreon supporters for helping grow this channel. Patreon supporters get early access to some of these videos, and they get exclusive content. Links to Patreon and to the merch are in the description below. I'm going to start off with an important disclaimer. I'm disagreeing with Elon. I'm probably wrong. I'm going to tell you why I think he's wrong, but let's face it, Elon is often more right than most other people. So I'm going to tell you what I think. You got to judge it for what you got to judge it. I'm going to use what Stephen Mark Ryan said to show why that analysis is wrong. I have tremendous respect for Stephen Mark Ryan. He's got a great channel, but I don't think the logic flies. Fundamentally, what it comes down to is if self-driving cars are safer than human drivers, then accidents become much more rare, and insurance should cost either much less or nothing. So let's get into it.
So the first component is robotaxis and their high utilization rate. Let's pull a number out of my ass. Let's say $1,000 is the typical insurance premium for somebody who's just driving the vehicle for their own purposes.
I agree with Stephen that $1,000 a year is a good ballpark estimate of the cost of insurance for the average person driving a vehicle for their own purposes. In my house, we pay $1,500 a year for each of our cars. We have higher level insurance, and we live in an area that has higher insurance costs. So $1,000 is a great ballpark figure, and it's a lot easier to work with.
$1,000 per customer who's not part of the Robotaxi fleet. What if you are part of the Robotaxi fleet? You're probably going to be utilizing this vehicle far more often. All things being equal, that would imply a larger insurance premium, right? It's more likely to be per mile, right? If this vehicle is being used 5 or 10 times as much as one that's for personal use, it's likely to get in 5 to 10 times as many accidents, all other things being equal, so likely your premium will be higher too.
This is where the insurance story falls off the rail. Yes, the vehicle will be used 5 times as much, I would say even 6 or 8 times as much. But when the vehicle is in robotaxi use, it's a self-driving car. So for starters, it should have fewer accidents. All other things are not equal. Second, when the vehicle is in robotaxi use, Tesla is responsible for the accidents. Tesla's software is driving the car. You are not driving the car. I'm not driving the car. Tesla's driving the car. For those who don't know me, don't know my history, I am a personal injury lawyer. I am a car accident lawyer. I used to work for Allstate Insurance. I'm currently on my own. I just filed a lawsuit out of a car accident case. If I have the choice of suing someone with a $50,000 insurance policy or a $500 billion company, when the $500 billion company is the one that's really responsible for causing the accident, you can bet your ass I'm suing Tesla, not you. So the idea that the vehicle owner is responsible for the accident when the robotaxi software is driving is false. And if you just look at Uber and Lyft, as far as Uber and Lyft are concerned, when you're driving in their network for them, when you're actually picking up rides and taking them somewhere, Uber and Lyft provide insurance for that. You don't. So you would not be paying car insurance for when Tesla is driving your car. On top of that, there should be fewer accidents. There should be basically 0 accidents once the software gets so much better than human. We're talking about 10 times better, 100 times better. It won't get drunk. It won't fall asleep at the wheel. It won't look at the girl in the bikini.
With the fear. Oi!
So many other reasons why this is wrong. This analysis is wrong.
Let's just assume that the average robotaxi insurance premium is only 5 times as much, despite the fact that the utilization rate is going to be much higher. So let's call it a $5,000 insurance premium per Tesla on the robotaxi network per year. Let's just imagine in the future there is 1 million Teslas as part of the Robotaxi fleet, all paying a $5,000 per year insurance premium. We have $5 billion of revenue in a single year.
So I'm going to give you some alternative numbers. How about instead of $1,000 a year for car insurance, if Tesla's driving the car 90% of the time, then you're only on the hook for 10% of the time when you're driving the car, if you're driving it that much. So your insurance rates drop from $1,000 a year to $100 a year. And if your insurance rates are $100 a year and you've got 1 million cars, then you've got $100 million in revenue, which is trivial in Tesla's long-term scheme.
If Tesla sells 20 million or so vehicles in 2030, but it has an existing fleet of around 100 million vehicles and each customer is paying an insurance premium, let's see what the numbers turn out like.
I just want to be clear. I like the way that Stephen approaches this, that he says, let's assume the fleet is this size and people are paying this much. I just think fundamentally his number is wrong. The assumption that insurance premiums will be higher or even, and not lower, is a mistake.
I'm going to keep things super simple rather than separating out robotaxis from regular personal use vehicles. I'm just going to assume that the average insurance premium for a vehicle in Tesla's active fleet of vehicles on roads in 2030 of around 100 million vehicles is $2,500 per year.
That $2,500 per vehicle for 100 million vehicles is a really, really big assumption. There's two big problems with it. First of all, a lot of people in the United States might choose to use a different insurance company. I do agree that Tesla insurance is likely to be a compelling product, and most Tesla owners should choose Tesla insurance if they can. However, it's very possible that there will be other insurance alternatives offered that will make more sense. The other problem is at least half of Tesla's fleet is going to be in other countries, and those countries may not allow Tesla insurance. It's not clear that Tesla will have insurance subsidiaries in every country in the world. Will they have Tesla insurance in China, in Japan, in Europe? Very, very complicated. Far from clear that Tesla will even try to implement insurance everywhere.
Let's multiply that out by the network and brace for impact, guys. This is a ridiculous number. $250 billion of insurance revenue in 2030.
If you follow my channel, you know I make some pretty big predictions with some pretty big numbers. I like to think the way I come at it makes sense, and sometimes I'm probably wrong. I look at how Stephen's going here, and he comes up with a really big, big number, and I think you can see why I think his assumptions at the beginning throw off the big number. If instead you figure it's $100 a year for car insurance, then the number becomes far, far less. It's 1/25th of this number. And I think the number is actually much less. I think there's a lot of other problems with it. I'll give you an example of a problem with this. Elon has talked about Tesla's custom Robotaxi fleet, that Tesla is going to have its own fleet of cars. And I have said this as well.
We made an important change to our leases. So if you lease a Model 3, you don't have the option of buying it at the end of the lease. We want them back. If you buy the car, you can keep it. But if you lease it, you have to give it back. And as I said, where in any locations where there's not enough supply for sharing, Tesla will just make its own cars and add them to the network in that place. Like Tesla-owned robotaxis would be in dense urban areas, along with customer vehicles. In our own fleet, I don't know. I guess long term we have probably on the order of 10 million vehicles.
It makes sense to me that Tesla would, of the many cars Tesla makes, millions and millions of those cars would be owned by Tesla. Those vehicles, Tesla would not be getting insurance money for those vehicles. Tesla would be insuring them itself. So if Tesla has a fleet of 20 million cars or 50 million cars, then those cars aren't paying insurance to Tesla. They're owned by Tesla. We are heading towards a world of robotaxis, self-driving cars that are going to be much, much safer than human drivers. Human drivers fundamentally are terrible. We're going to see far, far fewer accidents. Hopefully, we're going to go to near zero accidents, and there's no reason for insurance. I will say that I think Tesla insurance matters in the short run, in the next few years. If Tesla is able to deliver insurance to Tesla buyers, and that insurance cost goes from $1,000 a year to $500 a year, it makes it more attractive for people to buy a Tesla. If Teslas cost more to insure, it scares people off of buying them. That's a problem with some cars. So there's definitely an advantage in Tesla running an insurance business in the short run. I personally don't see it in the long run. If Tesla's business model is that the cars will be driving themselves, Tesla's on the hook, Tesla's liable. It doesn't matter whether I have insurance or not. There may be other reasons why they could make money from insurance. Let's say they offer some kind of insurance product that's very inexpensive for car insurance, but then they use that as a way of getting people to buy into other insurance products, life insurance, homeowners insurance, umbrella insurance. There's all kinds of ways that you might be able to make additional money. Maybe it leads people into joining Tesla's finance community. Elon said in the past when he was running PayPal, he thought it could be a bridge to creating some kind of finance business and making personal finance easier. So maybe there's some other way that Tesla insurance gets people in there, but I don't think it's making money on the car insurance itself, on the risk of accidents. It just doesn't make sense. Now, with all that said, Elon is smarter than me. Elon knows his business better than I do. If Elon says it's going to be a certain way, you're probably better off betting on Elon than you are betting on me. But I wanted to present what I see as the hole in the Tesla insurance story. Tesla's profit from cars comes from the Robotaxi network, as Elon has said many times. I'm not sure why he said Tesla insurance would be a big deal. Fundamentally, I disagree with him. But he might be right, and I might be wrong. Our goal is to be less wrong, and it's certainly possible that he's right and I'm wrong, or he's less wrong than I am. Please support this channel on Patreon. Check out the merchandise below. I want to thank my friend Joe Ramos. He's the sponsor of this channel, or a sponsor of this channel. He runs J&D Consulting. Information about him in the link below. Please check out my other videos. If you'd like to sponsor this channel, let me know. And tell me what you think. Put your comments below and tell me what you think about this. Do you think insurance is worth more? Why would insurance be worth so much if there's fewer accidents? It doesn't make sense to me. Tell me why it makes sense to you. Thanks for watching.